Welcome back, everyone, to Vox Markets. My name is Paul Hill, and I'm delighted again to be able to speak to CEO James Hickman of Finseta, a leading international payments and Forex platform. So welcome, James.
Thank you, Paul. Good to be back again.
Yeah, well, big congrats on today's strong and in-line first half trading update, with sales increasing 42% and actually 54% like for like to £5.1 million. But before we sort of run through the details, I don't suppose you could just quickly remind investors of exactly what Finseta does, and importantly what its key USPs are, and how it's really winning market share.
Yeah, absolutely. Finseta is a payments and international currency exchange business. We provide our customers, both individuals and businesses, a e-banking service, so virtual IBANs that they can deposit money, pay money out of, convert to 58 different currencies, and pay pretty much anywhere in the world.
Good. And what's the sort of USPs?
One of our key USPs, actually, unlike a lot of the market, we put quite a bit of emphasis on our high net worth individual business. Most payments businesses over the last certainly 10 years have focused very much on B2B. We've actually been fairly agnostic in terms of the types of clients we've taken on, and actually all of our business comes through a growing introducer network, and this means property agents, solicitors, accountants and such like, and actually we service both high net worths and businesses alike, and offer them the same service. So that's very much, unlike a lot of payments businesses, certainly within our sector anyway.
Yeah, and I guess you're probably taking market share also from the banks, aren't you?
Absolutely, yes. So, both businesses and individuals are still poorly served by banks, and actually banks tend to be quite expensive. Certainly, if you're looking to a large transaction or a large volume currency exchange, most banks, actually, you can't speak to anyone. All of our customers really do value the service aspect of the offering that we have, and do like to speak to their account managers. Each and every customer, be it an individual or a business, gets a dedicated account manager as soon as they've opened the account, which they genuinely really do value.
Yeah. No, I remember my father when he bought a property down in the south of France a few years back, that HSBC were charging him 3%.
and that's still going on, Paul. Ultimately, for some people, they might not care so much, but for most people, these transactions aren't, they're not buying villas in the south of France every week. So it's a big thing, and not only the price aspect of it, but also the security and the safety and the hand holding piece, I think, is very, very important for them.
Yeah, and then just driving that sort of the top line, can you just talk through the increase in client numbers and also average transaction value?
Yeah, so ultimately we've increased our client numbers. As I say, all of our customers come through a growing introducer network, and we continue to push out on that. Our sales effort is very much focused around to introducers rather than direct to businesses or direct to individuals. So we very much focused on that. Therefore, our average part of our key strategy is to increase our average transaction size. That means that we can offer an excellent service to each and every customer, be it business or individual. As you mentioned before, the revenue growth at 42% for H1 this year, it sort of hides part of the strategy that we've been undertaking and publicly talked about, which was offboarding our white label book. Historically, the business, when it was Cornerstone FS, really was built to service a white label proposition. So it was a platform. So the platform is fantastic. Ultimately, the commercial model wasn't so great for the business. We took the view to offboard all of our white labels, and that obviously did have an impact in revenue. And actually, so when you look at the sort of cold hard numbers, actually we're 54% up year on year. So I think, a very, very credible performance
Yeah.
overall, and we'll continue obviously on that vein. We know white label partners now, and all of our business is coming direct.
Yeah. And I guess that mix is also helping boost your gross margins, because I did notice that ticked up to what, 65% from 61%.
Exactly right. So obviously, as we were paying away a fairly substantial portion of the revenue to white labels, as we've offboarded, that margin has increased. We've been able to maintain and improve our margin actually as we increase our average transaction size.
That gross margin, I mean, it's fabulous for 65%, because the industry, even for fintech, best in class is around about 50%. And I can't remember.
Exactly.
Yeah, go
on. Well, I think that is a testament to the fact that we're a genuinely service-led business, and actually we're not totally platform reliant. So if you're a totally platform digital only offering, then actually your margin opportunities are far less than you do if you have a broad mix of product. And of course, we have customers that prefer to self-service, but we also have a significant number of customers who prefer to deal with us on the telephone.
Yeah. Good. And then just in terms of sort of new products, I know you talked about the full year sort of introducing cards and also expanding overseas. There's sort of Canada and then ultimately into Singapore and Asia and UAE.
So Canada, we earlier this year we got the FinTrack regulatory license. We have employed, or we've hired our first member of staff in Canada.
Congratulations!
Yes, no, absolutely, we're delighted. So we're also putting together or adding to our banking network there as well. So part of the reason behind sort of the geographical expansion, aside from adding significant value to the business and revenue, is having geographically local banking relationships, which is very, very important for a payment business. So that's allowing us then to onboard with 2 Canadian banks that we're currently going through at the moment. So realistically, I suspect first revenues to go through that platform will be September, and we're very much looking forward to building out that business. So we have one employee so far, but we will be building that out. And it's very, very sort of revenue sales focused initially. Yeah. On the card product, we are currently going through testing. Again, September is going to be a very busy month. Actually, we've got the full launch of that commercial card scheme, and if you remember, in partnership with MasterCard, that will be launched probably 3rd week in September. Testing is going well. And we're very, very excited to really make a fanfare of that product, because it will be fantastic, and also from a margin point of view, it will allow us to improve our margins even further, because that product allows an increased margin. Yeah. The final piece as well for sort of H2 is our Dubai office. As you may remember, we do have people there already. We have submitted our license application, and so I'm very, very hopeful that we should receive that as well in September, October the latest.
Yeah, and I think you mentioned last time a solutions opportunity, potentially product coming in the fullness of time. So more self-serve.
That is sort of here. We are actively onboarding solutions type customers currently, and the pipeline is looking incredibly strong. We are adding to our platform to accommodate, we'll call it alternative banking solutions, and we are building out our platform, particularly with partners and counterparties to accommodate that.
Great. And then I guess in terms of looking into H2, you've got a very busy period coming up.
Yes, it will be. It's going to be a very busy H2.
Yeah, but you've got sort of like with looking at the broker notes, looks as though FinCap is projecting £6.4 million for H2. SureCap, sorry, yeah, SureCap. £6.4 million compared to first half of £5.1 million. Is that just largely just sequential organic growth then? Because you've got so much going in terms of Canada, new products, and just normal growth within the business.
Correct. So there are no line items for any of the new areas that we're undertaking. Ultimately, I'm very cautious in terms of over promising to the market.
Yeah.
I'd much rather under promise and over deliver. These line items will certainly become more prevalent in 2025 for sure. Yeah. But as it stands today, there is no uplift at all for any of the new areas that we're undertaking.
Oh, right. Okay. So yeah, it is nicely conservative. Good. Well, that's what I hear. In terms of just bigger picture, if you look at sort of like 5 years out, can you just quickly remind the audience of where you'd like to take the business? Because I know you've got some big.
Well, you pinned me down on this last
big
time,
growth.
Paul.
I mean, the thing is, you're currently trading. You're hitting at sort of 11.5 million is projected by SureCap for this year. But where can investors sort of expect? Because I speak to a lot of fund managers, and the sort of key trait is to run your winners. And looking at SureCap's fair value, it's 70p, and you're currently trading at 36. So
correct. Well, significantly undervalued. Obviously.
Yes, exactly. That's the point.
I mean, realistic 5 year, and I think I mentioned this number before, and it is aspirational, but I do genuinely believe it's achievable to achieve £100 million revenue. I think with all the revenue streams we will be bringing online, particularly with the new products, with new geographies, I genuinely think that's achievable. Good. And that is our aspirational target.
Fantastic. All right. Well, thanks again for the update, James, and very much look forward to touching base for the interims, I think on the 10th of September. So just a few months. You'll have a lot to do. You won't be going away for holiday, will you?
Not for long.
Thanks again. And best of luck.
Thanks, Paul. Cheers.